Hello, retail traders. I want to bring to you a strategy that will help your trading out next week. It's called the falling wedge. Now, there's two kinds of wedges. It's the rising wedge and the falling wedge. The rising wedge, and we're going to pull them up right now. Whoops, wrong one. The rising wedge is a bearish pattern that produces higher highs and higher lows. And then it starts to squeeze at the end, and that's what you call a squeeze. A falling wedge is just the opposite. You get lower highs and lower lows, and then it combines and starts to squeeze for a breakout at the end of the wedge. Same way with a rising wedge. A rising wedge, you can see something like this right here, where it's rising and the stock falls. A falling wedge is just the opposite. When you're in a snake and you have a knife and it starts to consolidate, and then you have your lower lows and lower highs, and it'll squeeze out and go up to the upside. Now, that's the best possible time to get into a trade, is to try to find it at its lowest possible entry point. And by identifying what a wedge is from a snake, it's easily to get into that. I'm going to show you where I called one out Friday on the SPX. And I'm going to show you another thing that'll help you guarantee that that trade's a good trade. Excuse me. So I'm going to pull up the SPX chart. Here's the 5-day chart of the SPX. Now I've got it down on the 1 minute time frame. And I was calling this trade out every day last week, especially around Wednesday, Thursday, and Friday. We started breaking out, and that's about when I predicted on last week's video. I said Wednesday, watch out. So we broke out Wednesday, and we created a little flag, and then we had another breakout, and then we created another flag. Now, the benefit about trying to find a good entry, let's say we were in Thursday, trading Thursday, and it didn't look too good. I mean, we had a nice little breakout, and we just kept pulling back, pulling back, pulling back. Well, if you pull up that chart, that was a triple bottom, or let me see here. I want to make sure I'm at the right spot. This here pullback right here, this pullback here at the end of the day, both of these, I called both of these trades out, and that was the previous high that we had of the previous day. So what it was doing, it was finding support. Now if I draw a trend line across this double top right here, just like that, you'll see where we landed on that trade that next day. We bounced off of it a couple of times. We had a triple bottom right here. We had a snake with a triple bottom breakout. Then we had another snake here with another breakout to the end of the day. So that's one way of finding a good support. If you had like a breakout and it pulls back, go to that previous day and look for that previous high and see if that matches along, and see if you don't bounce up off that. Well, we had the breakout that next day, right? Look what happened. We had the pullback to the previous high of that next day, and we had the same kind of play. We had a triple bottom right here. And I was calling all these trades out. Believe it or not, I was calling these out right and left. And you can see it live on YouTube because it is recorded, but it's a long session. It's recorded all day long. And I made many trades on this right here. But it found support from the previous high, is what I'm trying to get across. Okay? Same as what it did right here. It found support from the previous high. And then we had that big bounce into close. And these are some big spreads. And you're buying these things at the very bottom of the day. And they are cheap. Cheap. And if you know that the market is bullish, it's a great trade. And the same thing happened here. You go in here and you look for whatever resistance it was that day, And it, the highest one's right here. And we're going to draw a little trend line right there. And you got to be patient when you're taking these trades. You got to watch the news and stuff. And that lowest part of it's right about in there. So somewhere in this channel, you're going to find support for the next day. And boom. Right there, see? Pulled right back to that previous triple high. You got 1, 2, and 3 supports in there. 1, 2, and 3 supports. And then you had the triple bottom right into close. So that is enough to recognize that that third time is a buy. So this is what I was talking about when I'm talking about the falling wedge. I called this trade out here right at the end of the day. I went and I drew the snake out. And I said, folks, we're getting ready to have a snake. And I went ahead and drew this snake out. Just like that. And then we broke out. So we pulled back and I called the higher low. Took the trade and scalped it up to the 65. And then we called it out again. Well, by this time, what we have done is we've created a wedge. This is the falling wedge. And this is the secret about trading a wedge. I want you to realize that I've traded them 1,000 times. And the best time to trade these things, you draw that out. So you've got your snake. You take it to the next candle. Okay? And you draw that thing out. So you've got your snake. They formed out, and then what do we have here? We have 3 white soldiers. So this thing's pretty bullish. I recognized this and I described that in the room. I said, folks, we got us a nice little run getting ready to happen here because we just broke out of the snake with 3 white soldiers. But don't take it now. Don't take it now. Don't rush into a trade. Wait for it to pull back. Because we're going to create some kind of flag, and it's going to pull back. If we get the higher low, then we'll take it and run it up and break it out. And if it decides to go ahead and create a flag, then we'll take it out, some kind of flag. You don't know what kind. It could be a Darvis box, a sideways channel. It could be an ascending triangle. This case, it was a falling wedge. And then we broke out again with the falling wedge. See, now I want you to see how these breakouts, out of each one of these flags, we broke out with 3 black crows, or 3 white soldiers. If I said 3 black crows earlier, I'm wrong. 3 white soldiers right here. 3 white soldiers right here. So, I mean, we were breaking out of these flags with these soldiers. So we built into this symmetrical flag. Now the secret in these flags, I want you to understand, is the 3. Remember 3. It gives you all the time in the world to take a flag, to take something like this that's bullish, and to make sure it's bullish. So you break out of the snake, you pull back, you break out, and you create a double top. It stops, it starts to pull back, then you recognize, okay, let's catch this on the 3rd bottom. 1, 2, and 3. Now, if they don't break out on the 3rd time, that means it's not as bullish as if it would be if it was the 4th, 5th, or 6th, or 7th. The 3rd time to me is the major time for the breakout, in my opinion. And that's just my opinion because I've seen over 2.5 million charts and witnessed these breakouts over 100,000 times. 1, 2, and 3. 1, 2, and 3, and it breaks out. And then once it breaks out, take that profit. Take that profit. Take that profit. Unless you want to follow it through and you have some kind of stop. In this case, it stopped right at the pivot point of this flag. And then ran on up till the end of the day. And this was a nice trade, folks. I was in this trade at 40 cents and it ran all the way to $2,000. This was the SPX. So yeah, this was a nice trade. But that's just one way of doing it at the end of the day. And we had the triple bottom, so that was a recognition. Everything's in 3s. Okay, 1, 2, 3, 1, 2, 3. I'm telling you, 1, 2, 3, boom, down, and then we hit this. We had this support level from the previous day, which was telling me that we were definitely going to hold that channel, and we did it 3 different times throughout that day. So once we hit it the 3rd time, I called this trade out, and then I called it out at the bottom 3rd time of this wedge. I told people, I said, just take your time. It's going to come up and down and squeeze out at the end of the day. And that's what it exactly did. Snake, flag, symmetrical flag, and then the breakout. So that's it. That's how to play the falling wedge. And remember, there's 2 kinds of wedges. And then I want to talk about one more thing. There's 2 kinds of wedges. We got the bear flag and the bull flag. The rising wedge, and always look at them like if you're having a nice run up and then it forms a flag, you're going to pretty much think that that thing's going to pull back and you can buy a put. And that's on the SPX or the SPY. And vice versa. At the end of the day, if it starts to form some kind of wedge off of a snake or some kind of pattern, and it's a bullish pattern, play that call to the upside at the end of the day. It's a good scalp. I guarantee it. You can do it. That's another thing. It depends on the time of the day, how they react, and how you trade them. Okay? Because they could be totally different. Totally different. See, what we had here on this snake was what I call, just looked to me like kind of a bearish flag, but once it hit a double bottom, it broke out of the triple top. So that's it. You all have a great day. Enjoy that trading. Sneaky snake trading strategy.